Okay, so good morning, everyone. I'm very excited to be here today. I'm Mars. Today I'm going to lead this session. First of all, here I would like to ask everyone, who is it get involved in the RWA industry at the moment? Nobody? Oh yeah, there is some. Yeah, that's great. Yeah, so today we have the very special guest here, and I'm very excited. They are specialists of RWA. I'm very excited to hear their insight. So first of all, I think that let's start from the introduction. So could you briefly introduce yourself? Yeah, let's get started from the, Wish.
Thank you, Miles. I'm Wish, the CEO and co-founder of Pharos. Pharos is a new layer 1 building to unify Web3 and Web 2 through the capitals, the asset, and the users. We are now building a layer 1, high performance layer 1 with the. Okay, finally we got full. The panels here. It's great.
Now we all got.
Yeah, that's good again. So Pharos is building the new one to bridge in the Web 2 and the Web 3 through the capital, asset, and the users. We are building the layer 1 for the strategic partners with many of the institutions on RWAs, stablecoin, and payment. Yeah, thank you.
Thank you. Yeah, next, thank you for coming, Fred. Yeah, please briefly introduce yourself and your project.
Yeah, my name is Fred Xu, CEO co-founder of D3. D3 is tokenizing the world's domain names on a chain called DOMA, D-O-M-A, kind of like domain names. This is a $350 billion asset class. Everybody builds on domain names, whether it's .com or .ai or .xyz. We've all seen this. Everything built on domain names. And our mission is to kind of bring this asset class on-chain to finally make it very liquid, just like physical real estate. Domains are like digital real estate compared to physical real estate, which are fairly liquid. We're about 40 people. We're based in LA and SF. Thank you.
Yeah, great. Marcus, please.
Hello, hi, I'm Marcos, CEO and co-founder of Parfin, the core developer Rayls. Rayls is a blockchain for banks. We have, supporting banks to migrate to their products on chain. We started with two products, a private network, and we're launching a public chain now. We have five now going to the 6 private chain production where banks are tokenizing their assets. We're very excited about this development and with the upcoming launch of the public chain with on-chain banking services. That's for building.
Hi everyone, I'm Koei. I'm the HR ecosystem lead for IOTA. IOTA is a 10-year-old layer 1 who have been in this space for 10 years. We are the oldest deck, and then we always focus on government collaboration. Now we focus on building the trust of the global trade on chain. We working with government to gather traders' DID, the digital product passport, the trade receivable, invoice, tax data on chain. And then we go from the trade logistic to the trade finance. That's what we do now. We will tokenize trade receivable, and then from copper, critical minerals, the commodity and critical minerals. Commodity like coffee bean, critical mineral like lithium. We first start with East Africa, and then we'll expand to more countries.
Great. Thank you for your introduction, guys. So the RWA surpassed the $30 billion in the on-chain asset. So it's very exciting to hear their insight for today. So let's start from the very general question. So do you think that how protocol can unlock the yield, liquidity, or composability with tokenized asset? Yeah, maybe let's get started from that, Wish.
Yeah, so definitely the protocols, especially on-chain protocols, are really important for RWA because everybody knows the RWA has, if it's put on-chain, it's traded simultaneously real-time on-chain, but the liquidity is, there is kind of a gap between this real-world asset and this on-chain asset. So protocol is in the middle to help to solve this liquidity problems here. For example, if we have enough liquidity pool in the DEX, in the lending, that could help to resolve the liquidity gaps when doing the on-ramp or off-ramp. If people can stay using, for example, using stablecoin, using other derivatives on those RWA on-chain, they can greatly reduce the risk when any people want to redeem to the fiat, to other stablecoins. The protocol could help that. Also, we already saw that a lot of the RWAs on-chain are using lendings to do the looping to increase the yield of those RWA. So basically, imagine it's like a whole bunch of the trading infrastructure. When Web 2, they can all be built again on-chain with derivatives, with all those protocols to have this self-looped ecosystem on-chain to solve all these trading problems of the RWAs.
Yeah, thanks. What do you think there? The fact.
Yeah, I think the question is how does DeFi make its way and become more liquid through things like RWAs? I will say domain names are like real estate. One of our investors sold chat.com to OpenAI a couple years ago for $15 million, $30 million in stock. Now it's far more than that. I'm sure it's worth something like $100 million plus. People have always known that real estate and have always been able to borrow and lend against real estate. If you look at the United States alone, I think the market of the physical real estate market is something like 30 trillion. But the whole of the digital economy is something like 16 trillion, yet this asset class is less than 350 billion. So if you can finally start borrowing, lending, tokenizing your real estate, like your online real estate, you can open up all kinds of possibilities for DeFi. That's why we're very excited about DomainFi, which is DeFi for domain names, talking like .com, .ai, .xyz names, which everybody has had a problem with trying to buy, locate, sell. It's just a very, very tough market to kind of get into.
Yeah, Marcus, your opinion?
Yeah, I think everyone talks about tokenizing something, right? Every day, but in some cases you don't bring real utility for the token. It's just a representation of an asset's on chain. I like what Sam mentioned. We've been very, very focused on receivables in general, trade finance receivables, credit card receivables, yield-bearing assets that can be tokenized and distributed, on chain. And this has a real value and utility because many companies, they have products, they have their commercial receivables, and they not necessarily have good funding lines. And by tokenizing those invoices and commercial receivables, they can explore other sources of funding and opportunities, sometimes cheaper than they have currently. And I think this is a tremendous utility. We're talking about the GDP of the countries because it's where trades are happening. People are consuming, shops are selling. So one of the good examples we are doing, it's in production. We have this largest acquirer where they provide the POS. When you swap your card in a restaurant, we're tokenizing the underlying credit card receivable. Because the shopper, the merchant, they receive that credit card receivable in 45 to 60 days. And then we wrap those receivables into a lending pool, and their funds providing funding. So this is a real case on chain, which we're very, very excited. I think this, when you bring a real utility for the RWA, that's where things start getting exciting from the user perspective, from the distribution, etc.
Chang, what do you think?
Yeah. So I totally agree with Marcos. Like, data is the new oil. We need to bring the data on chain to solve real problems. Who really want to borrow money but cannot get a source of fund? That's how we can help them. So for IOTA, we focused on the $1 trillion trade finance. If I'm a farmer in Kenya, I can sell my flour to UK, or I can sell lithium battery to Shanghai. But I already get an invoice, I only be paid 90 days. I need the cash to pay my employee today. How can I get it? So, and if people want to borrow me money, they will ask like, are you a real trader? I will say, okay, I have a DID on chain. Is this invoice real? Yes, it's issued and recognized by Kenya government. Do you have the digital product passport for lithium mine to make sure it's not from some child labor place or conflict zone? Yes, we also have the thing on IOTA. So once we get all these different data on chain, we can unlock the $1 trillion business of the trade finance, which is not available today. So that's how we believe. We start with become the trust layer of global trade data, and then we go from trade data to trade finance. That's our vision.
Great. Great to hear like all of the insight from the all like diverse the specialists. So yeah, you know like the RWA the market itself, it's already, as I said, already surpassed $30 billion, but it's RWA is huge. So my question is that can actually on-chain market handle this kind of like huge the value? So I'd like to ask this basically if they can handle institutional grade the asset. Yeah, so let's start from there, Fred. Yeah, what do you think so?
Well, I mean, my Web2 company, we handled about 1 million queries per second. It was an ad tech, it was an SF about 10 years ago. If I look at the transactions per second across major chains, whether they're meme trading or not, it's still like what, sub 10,000 queries per second? It's kind of like child's play compared to the previous iterations of companies, tech inside of Bay Area or not, right? So as long as the tech, I have a little bit of a contrarian view. The tech doesn't matter. All blockchain is distributed ledger. Once you kind of have the right functionality, security model in place, like speed, it doesn't matter what you run it on. So I do think that given today's state, if you think about where DeFi can go, and if it's kind of like systems limited, that's an easy thing to solve. So I do think that you first have to focus in on, like the other panelists over here said, focus in on basically a problem that needs a solution, because I think there's a lot of solutions in Web3 that are looking for a problem. If you get that right, don't worry about the tech.
Yeah, great insight. Yeah, what do you think maybe Cheng?
I totally agree. Like, technology is like commodity in a blockchain space. In 2017, people have so many ways to design like layer 1, but nowadays you see all the new layer 1, they all have sub-second finality, more than 50K TPS. They can have like all the version, like an authority control, so they can issue security, they can issue stablecoin. So basically, except for Bitcoin and Ethereum, all the new layer 1 more or less get a same tech. What's the problem we can solve? I think that's the problem. So to solve, and then whether institution can handle it, then we need to find people with track record. So for example, for IOTA, we just have our first trade finance on chain last month with Pharos. They are built by Tradeflow Capital. They already do like 250 million trade finance deal in the past 7 years. So to get into the specific vertical to solve the specific problem, we cannot just say, okay, blockchain can solve everything. Definitely not the case. We need to go to the vehicles to ask the expert there what kind of thing blockchain can help you to solve. It's not like, okay, now we have ZK and we ZK everything. That's for sure not the right way to build the products. So that's how we think like blockchain can definitely handle the institution onboarding, but just whether we have the mindset to really solve the real problem. And then another thing is we need to get the liquidity, especially from top-tier stablecoin. I will say Bitcoin and stablecoin are the two greatest innovation in crypto space. You can say Bitcoin solves the store value, and stablecoin solve the daily spending, remittance, and so on and so forth. So we need to onboard stablecoin to our into our network. I will say that's also the need we can onboard institution, because institution level we cannot just ask them to use the fiat to on-ramp off-ramp. We would have a proper, no matter that's MiCA compliant or Genius Act compliant, or maybe the better one is Tether. That's how we are trying to onboard. Yeah.
Great point. Fred, what do you think about the opening there? Sorry?
Oh, I just spoke. Do you want to let one of the other? I'm sorry, is there another question?
Yeah, no, I mean, that's just say, yeah, you can accept.
It's the same question?
Yeah, same question, actually,
okay. Yeah. So I think the liquidity and the volume of the RWA, they are increasing along the way. So if you are talking about a few trillions of the RWA on-chain, definitely currently we don't have enough liquidity on-chain. Even the infrastructure is missing. But currently we would say that the onboarding pace is still like a few billions of RWA on chain right now. So currently, I think it's okay, and there honestly you can see most of the RWA chains they don't have enough. Many of the trading volumes right now, mostly of a hold and the invest and hold. So, but it's still like most of the current RWA, like TBO, private credit, it's yield bearing. It's not for trading actually. You buy that, you hold that, and you get the yield. You don't want to trade it every day. But if we are talking about those tokenized stock and more of the prices vary and every day, those are RWAs, there will be need more infrastructure and liquidity to be traded on chain. And currently, we don't say there is a comprehensive infrastructure and liquidity can support that. But as long as those RWA are onboarding and the volume is starting to grow every day, I think there will be infrastructure that could meet that requirement. That is also what Pharos is building right now to support those infrastructure for the high frequency trading and enough deep liquidity for those RWAs.
Great. Fred, if you can add anything.
Yeah, I think liquidity is like the chicken and the egg. What comes first? The assets comes first or liquidity comes first? It's very difficult to predict. What we're doing is, I believe, and again, Sang mentioned about various L1s, kind of trying to converge to the kind of same technology. That's why we're building a specific purpose chain designed for banks and financial institutions, and we go from the infrastructure up to the stack, because banks and financial institutions, when they want to use it, they want to have primitives that would allow them to be compliant. And then, so if you unlock the compliance element, privacy, liquidity might come. It not necessarily will come, right? But there's some principles that they will not come if you don't have it. And so what we're trying to do is to be in a specific purpose chain designed for banks, financial institutions to bring assets on chain and to provide, more important, not only the tokenization, to provide on-chain services. So what I mean by that, there will be votes and yield-bearing lending pools where banks or banks' clients can provide liquidity to borrowers, to people that are originating deals and distributing. Because, if you take, we're talking about $16 trillion, where this money will come from? It's not from individuals trying to allocate as they do today on AV or et cetera on the crypto world. When we're talking about, trillions of dollars of yield-bearing assets on chain, you need to have big pockets on the one hand. So, and then this is channeled through the bank. So our vision is to bring this, on-chain banking services. Not necessarily provided by bank. There are investment funds that allocate big chunks of capital in credit markets. So we are building this infrastructure to attract this liquidity, and they will be comfortable with this. So it's a kind of bottom-up and top-down approach. One angle, we're bringing this underlying, primitives that people say, I feel comfortable to use this. Because users like KYC, your generation attestations, suitability on chain, etc. And on the other hand, the allocators of capital will say, I trust this because this lending pool is provided by a big financial institution. I will put money there. So I think this is the combination that we believe will attract liquidity and institutional adoption.
Great point. Yeah. Thank you for sharing your opinion. And let's move forward for the next question. So the bridging the TradFi and the DeFi now. So what do you think of what kind of the infrastructure is currently missing in this on-chain market? So maybe if you have any idea, Sang, do you have any idea for this?
Yeah. So I would say the most important thing is about trust. So even though crypto, we come from a libertarian or cypherpunk roots, but now we are talking about RWA. Like government and the existing organization will not go away. Somehow you need to get a trust from them, and then you build the infrastructure, you build a standard together, and then you can onboard $1 trillion of RWA. If we just have crypto native asset like Bitcoin or Ethereum, it will not go like trillion for trillions. It just stay there. So that's how, for IOTA, we are a nonprofit organization. We have no for-profit arm. We have no lab. We have no security. And then we are the first compliant foundation back in 2018 in Berlin. And we are the first compliant foundation, a layer 1 foundation in Abu Dhabi on ADGM 2023. So working with government get a track record, go through a Lindy effect, and then slowly onboard more data, and suddenly you go from all these trusts and data to the financial product as the trade finance. That's what we do. So I would say the missing thing is like crypto in some sense is the most impatient industry on earth, but we need to have patience, and we should not be anti-government. Government will definitely stay here, it will not go away in the foreseeable future. I think that's the thing we are missing, and we need to recognize how we can working with government and the existing institution. Yeah.
Right. Yeah. Wish, do you have any opinion?
Yeah, kind of totally agree with what Sen says about the trust is actually currently missing the infrastructure. But currently we saw actually two ways to solve the trust. First is more about legal ways, right? We have this how to determine the ownership of those assets in the Web 2 and project to Web 3, and currently we rely more on the more regulated institutions, the licensed institution to do that. But eventually, I think as the blockchain itself is built on this trustless technologies. So I know some of our partners are doing that. They are using technology to do this IoT devices, using the high frequency oracles to put all those data, the trusted data on chain to prove the ownership and the performance of those assets. And eventually, I hope that this technology could solve those trust issues between this Web 2 and Web 3. Yeah.
So for the trust, I totally agree. It's not just come from the government. It's also come from the real world data like IoT. Just like you probably know IOTA, we have IoT in our name, but we don't really push this direction. But IoT is still in our product. So for example, after the traders in Kenya, they have bill of lades, they have their text data on chain. We also need to know like whether this cargo of lithium is really there. You need to have the geolocation. You need to have a smart lock. After we put like 100 tons of lithium inside some like cargo, you need to have a smart lock. Before it reaches Shanghai, it cannot be unlocked. So this kind of IoT data is the same important as the legal data. But we just need to put more data on chain. And the high quality one, no matter the trust is come from government or the trust is come from IoT sensor.
Oh, great. Yeah. Maybe like yeah.
Yes. I would comment on that. The IoT is it should be a more general terms other than what we know, including the geographic and those kind of things. And also, I think it's depends on what kind of RWA is, right? If it's you say it's a share or equity of a company, probably IoT is hard to do that.
Yeah, I totally agree. Just like if you do real estate or you do T-bills, you don't need really IoT stuff. But if you're tracking trade finance or, for example, like Marcos, they track the credit from the credit card. You need to, if you know where is the credit card, if someone spend money like 10 a.m. here and 10:01 over there, you would probably know that's a fraud or something. So for a lot of RWA, real world geolocation is necessary, but for some doesn't matter. That's true.
Yeah, I think another infrastructure is missing is about the compliance component. Currently, I think most of the RWA are trading as securities or other ways. They need the KYC or AML component. But currently, most of them are still in the Web 2 ways. You need to scan your passport, you scan your face, and etc. It's kind of cannot keep up with the pace of the Web 3. Most of the users are not getting used to, no matter you buy that or transfer that, you need to do the KYC. That doesn't make sense in the Web 3. So I think they are leading an on-chain KYC and AML component that can be more efficient and more user-friendly to all the investors on the web on the RWAs. So that currently we are exploring that using ZK, using on-chain contract that people can do the KYC at one time. They can be used for all the applications and RWAs on the chain. So hopefully that we will have a better way to solve that and also being accepted by the regulators through this way.
Yeah, it's great to hear the sparks between the specialists there. Fred, or do you think there's something new for you?
Oh yeah, I'll be pretty quick. I think governments are great. Regulation's great. It's the only way that real estate in around the globe is worth $300 trillion, right? You can like live in a house, you can touch it, you can see it, it's all unique, right? Without regulation, there's no trust. So that's the only way that these like assets can gain credibility and the right type of liquidity that like all these Web3 degens love.
Yeah, Marcos?
Yeah, I think to represent an asset on chain, you always will need data inputs. If you really talking about the real world assets, there are some that will need IoT systems because you need to track cargo. There are some that will need real time, like invoice checking, or even if you are issuing a stock, access some real estate, maybe access to a notary service that to make sure that the house has not been sold. And again, I think this interoperability is still evolving. And again, I think in order for this real world to happen on chain, there will always need to be this interoperability layer, and that's one challenge actually.
Yeah, great point. So next question is, let's move forward about the future, right? So do you think what kind of the RWA will lead the next wave of the tokenization? So I'd love to hear you guys' opinion. So let's start from the Fred. If you have anything something that can bring for the next future for the RWA.
Well, first, again, going to regulated assets. I love treasuries because there's a national yield, there's a coupon, you can actually get whatever it is, 4 to 5%. I'm sure it's going lower in the States. But also, on that real estate, just like real estate, all domain names like chat.com, just like Beverly Hills Mansion, in most cases, they all go up over time. They've all gone up, 50 to 100% over the past 10 years. So I think that I'm obviously biased, but I do believe that digital real estate will have an infinite compounding capability because it's rare, it's real, it's trusted.
Right. Fred, what do you think for that we can read? Yeah.
It's me. Yeah, I think, again, the future it looks promising, especially with this unlocking of regulation around the world. I think we've been very focused on, as I said, the commercial credit card, trade finance receivables, commodities, and I think this will be the next big, asset class on chain. Stocks, bonds, they will come. Funds, it will happen, naturally. But it really solves a problem. I don't know, but on this more trade finance, as I said, it solves a big problem. It unites who needs capital to who wants to provide capital, and I think it's very promising.
Yeah, I will say the human civilization grew very rapidly in the past few centuries. That's because of the global trade and free trade. So we believe the real yield will come from trade finance. So IOTA, we are now focused on these vehicles. We believe we will weave ourselves into the trust layer of global trade. And we believe international trade and free trade will stay here and get human civilization even a higher, to go somewhere maybe we can imagine the singularity, maybe.
It's great to know that. Yeah, what do you think, the wish?
Yeah, I will be really quick. I would like to say that it will be more geographic. So currently, most of the RWAs are from the States, from the Wall Street, but actually there are, due to the lack of the comprehensive financial system in many of the developing countries, and for example, India, in South Africa, in many of the countries, actually they have many of those assets is worth investment, but normally people don't have the chance to do that. I hope that there will be more RWAs from those regions, from the rapidly growing emerging market. There will be more RWA for all the Web3 users could invest, and we're working on that because they have better yield. They are quite easy to be accepted by many of the users, and their yield is much higher than than the normal general financial product. Yeah, I would love to see more country will people and benefit from those diversified assets to be onboarded.
Yeah, can't wait to see that how the RWA market is gonna grow the next decades. And that's all question what we have today. And I'm really learned a lot thanks to you guys. And please give a round of applause for the special guests for today. Yeah.
Thank you.
And today we're gonna keep going for the hack season, and I'm excited for the what's next topic. Yeah, thank you so much, guys, and have a great afternoon. Yeah.